following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for,
That's awesome.
for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Create the perfect relationship between you and your body. Treat your body with all love, honor, gratitude, and respect. When you make it a goal to adore your body and accept yourself completely, you learn to have a perfect relationship with anyone else you are with. Market-wise, let's take a look at it out here. We have the Dow Industrials up 73, NASDAQ up 30, S&P's up 2.5, gold contract down $4.90, trading at $12.02 an ounce. Silver, flat. $14.66 an ounce. Light sweet crude up $1.11, trading $76.34 a barrel. Notes and bonds, big numbers, folks. 10-year note down 21.6, 118.05. 30-year off a full 2 points, 138.20. Both notes and bonds, they just took off topside, meaning. Well, he took off downtown, actually, bringing rates topside, the yields topside, the prices downtown. And they do have wide price spread. They have monster volume. King dollar's up 305 ticks, trading at 95.445. The euro's trading at 115.11 to 1 US dollar. The yen is at 114.34 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we're into the fifth day up here. Well, actually, longer than that. The high, the high generated on September 20th, that high had $293.94. Bottom line is that each and every time it just gets into the lows of the high, it basically has been giving it up. We'll see how this shakes out today. What we did out here today is that you got up to 293.21, and right now you're at 291.93. If we go over and we take a look at the E-minis, we set up these E-minis, what you're going to see is that you had fast, furious. It took a while, too. The bottom line is that the bond market went downtown, meaning yields going up, prices going down. And then all of a sudden at the 230 mark, the market decided just to give it up pretty quickly. We had the S&Ps give up 10 points in about a heartbeat. That being said, let's get this closer to see where we can figure this out coming into the close. Okay, so you get the big sell at 230 to be exact. That's 59,000 contracts. You make a low out here at 45,000 contracts. And the real question is, so 26, 29, 26. Yeah, 29, 26 is game. That's, we already did, we did 29, 25, so that's already there. Well, we'll see what kind of bounce we get out of this. Because we already hit that number, the bottom line now that opens up the 24 as well as the 29.17. So that's going to be pretty intriguing, man. That's going to be pretty intense sell-off once again. Dow Industrials went to another new all-time high. Dow Industrials traded up to 26,951 and just gave up $100. You're still up $77, but we were up 177. NASDAQ Composite, we take a look at the composite. Composite out here, sideways market, up $30. Composite can't handle September 5th. September 5th, that's when the composite went from 8,077 down to 79.62. Just can't handle that 8,077. We got up to 8,053 today. NDX 100, same type of setup. And what's strange about the NDX 100, this thing should have went to the moon. Bottom line is that, we'll go through it. But the NDX 100, you're at 76.42. Your high is 76.91. We got to 76.76. Inside the NDX, let's see the strength versus the weakness. Strength out here is Wynn Resorts. That's up 3.4%. Xilinx is up 3%. You got Seagate Technologies up 1.9%, and Biogen is up 1.9. Now, that being said, what's also in there in a big way is good old Apple. Apple has had a strong day out here. Now, Apple was up at 233.47. It's given up a buck, but bottom line, you still get a big day in Apple, and that, in fact, should be pushing that NDX 100 up into new highs. Inside the Dow Industrials, the strength, Boeing. Boeing has been pushing this Dow pretty dramatically. Boeing is putting 40 positive points in here. And when you take a look at the last 4 days, Boeing has just gone from $364 to $392. So if you wonder why the Dow Industrials just won't basically go downtown, it's not all about Boeing, but because we're talking about a price-weighted index, Boeing is the number. But if Boeing goes south, get out of the way ASAP. The positives in there out here today, Boeing's putting 40 points, Caterpillar 24, Apple 18. Taken away from it, Procter & Gamble 9, Johnson & Johnson 8, Walmart 6. Now, let's go take a look at the notes and bonds. This is serious business, folks, because this, okay, so we get the 10-year note. The 10-year note is traded from 118.28 down to a price point of 118. Now, this downdraft started right from this morning at 9 o'clock. For some reason, the market didn't pay attention to it until 2:30 this afternoon. And what's so weird about that, at 2:30 this afternoon, that's when the note, as well as the bond market, was at its lows of the day. But all of a sudden, guess what? The market paid attention to it. And I can tell you, the bottom line is that what gets intriguing here about the note and bond market is this, is that, number one, we haven't been used to higher interest rates in a long period of time. Number two, the stock, I say we haven't been used to it. I'm talking about basically in the context of mortgages, loans, all of the above. The market, the stock market hasn't got, the stock market will end up taking conniptions, folks, okay, with fast bond moves like this. So what does happen is this, which is going to be pretty wild watching this shake out. You get a break with conviction like this. I expect you're going to go lower. As we go lower, the only thing that can save the notes and bonds right now is actually that the stock market take a conniption, and then you'll see a turnaround, and they may very well maybe dead cat bounces all the way from here to basically for quite a while. What we are doing, and I'll go through when we come back, what we are doing, we're going into a huge support area that the bonds did consolidate for a good 3 or 4 years. Stay right there, folks. Come right back. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 52. You get the NASDAQ up 24. S&P's a flat. So you get iHeart Media Radio, folks, is going to invest $10 million into, let's see, High Times magazine. That's been around forever. So let's look at this thing for a second, because, let's see. Pull this up here, because I think this is more so, it looks to me like it's more so a barter deal. Because High Times, I mean, iHeartRadio has been broke forever. Yeah, exactly. I thought what Tiger said, they're bankrupt. They are bankrupt. I don't know how this place has hung on so much. That's the real bottom line. Let's see what they say, though. iHeart Media agreed to invest up to $10 million in the publisher of High Times magazine, which focuses on marijuana, the Wall Street Journal reported, citing an interview with High Times Chief Executive Officer Adam Levine. The deal would give iHeart about a 5% stake in High Times Holding Corporation and will provide the publisher with access to the company's radio and outdoor advertising. iHeart has agreed to commit $5 to $10 million worth of ad inventory in High Times. High Times plans to use the advertising to publicize its pending IPO. Yeah, so this looks to me like a barter, folks. So this is they got a good deal out of this. So check it out. They got a bankrupt company. They swap out, which in advertising that happens a lot. You know, they can do some big deals. They swap out ad inventory for the investment. And if you want to see, this is like pretty freaking wild, man. Because this was Clear Channel. We were on so many of these channels. It's crazy. Let me see this. Let me pull this up again. I gotta. iHeart. H-E. Okay, so iHeart Media, and this is a 5-letter symbol because they are BK. Okay, so it's trading at 43 cents. They don't do any volumes anymore, and you get a revenue stream. You know, they have a revenue stream of $6.2 billion, but guess what? They owe so much money, it's like insane. But, you know, you can see these negative numbers that are out here. They're pretty dramatic. Hey, we'll see where it shakes out. Bottom line is that, you know, High Times is smart to go out and go public right now. That's for sure. Whoever thought that High Times would be public? The thing that's amazing is that I'm trying to figure out, you know, you do they're almost just giving that deal away, meaning High Times, it's evidently worth it. Now, watch how this shakes out. It's worth it for them because those are all the pop radio stations, right? So what you're going to have is they're going to blast out huge amounts of advertising that High Times are going to go public, which is unusual in itself. But I'm sure they're going to have a way to get around it. And, you know, what that will do is it'll explode the price of the stock because, you know, there'll be plenty of folks that are not in the market at all looking to, you know, basically buy into that whole deal. S&Ps, they just went negative. Let's go take a look at some of the higher volume equities out here. Yeah, Cheech and Chong lived 50 years too early. Well, they started the revolution. That's the bottom line. Them and a lot of other folks. But, hey, 50 years, it's pretty wild how fast 50 years actually go. Let's go. We get Micron Tech is down 49 cents. You get Advanced Micro down 35. That was down a lot more than 35, so that's come back quite a bit. You get Facebook up 296. Comcast is down 60 cents. You get Twitter up 88. Alcoa is up $1.13. Wells Fargo's up 45. Yeah, let's go over and take a look at some of the banks, because what you have had is that this bond move has spread out the curve in a big way. Well, JP Morgan still can't catch a bid. You know, you're up 95 cents, but that's not enough. Bank of America, BAC, that's up too, but nothing heavy. That's up 42 cents. Let's go to Berkshire. So Berkshire still is the largest weighting structure inside the XLF. Berkshire out here up 97 cents. It's pretty, I guess, it's pretty intriguing that the banks have not gone dramatically higher because of the fact that this has been such a fast move. Let's go over to the oil market and take a look at oil. The oil market was incredible this morning, folks, because what we had is this. You had a build of over 9 million barrels, and they were expecting, bottom line is that a build of 1 to 2 million barrels. Bottom line, when the API number come out, oil goes down to $74.30 and then takes off like a rocket ship, gets up to the 76.44. You've done 669,000 contracts. And if we take a look at the complex in general, what you're going to see is that you get crude up 1.6%, you get heating oil up 1.2%, and you get gasoline up 0.5%. We go back over to the crude market. I'm going to put this on a continuous contract. And this is the danger point here is pretty amazing. And what the danger point is that we bring this back. What you're going to see is that once that we did launch this 75 price point, bottom line, because we had come down so fast in 2014, this thing is gamed to like 91. It's pretty intense, man. You know, we already blew through the 75. You get 77. You're going to get a little flack, hardly any flack at 77. And it's because of the way that we basically came down. When we came down in 2014, oil was $107 in June of 2014. And we got, that's 7 months later, is at 43. You know, we launched that whole area, and we launched it after 5 months of cause. It says it's game up into that number. You know, and gasoline, higher. Heating oil, higher. Big numbers. We'll see where this is going to shake out. What's surprising out here, I can tell you this. Let's go over to the gold market. What's surprising is that with interest rates up a full 2%, it's pretty amazing that the gold market is not destroyed. You know, what we have out here today, we had a huge sign of strength yesterday. Gold goes from 1192 to 1212. We do 360,000 contracts. You back down today, you have light volumes. So there's a lot of different dynamics that are taking place simultaneously here. And we'll have these babies shaken out in the next few weeks, because when you have larger changes in the market like this, it's going to be really an aspect of where is that dollar going to go? What is happening inside of the bond and currency market, the Bill Gross is, who's a huge monster bond guy, he is basically saying that what you have here, because of the dollar and the amount of money that it takes to hedge the dollar right now in the yen and in the euro currency, that, yeah, in the yen and the euro currency, is that, in fact, it takes 2.41% over a 3-month period in order for Europeans and Japanese to buy bonds and hedge the currency simultaneously. And evidently, I'm not sure whether they all do that, but he's blaming that aspect for the route that's right here, right now. Dow Industrials up 32, NASDAQ up 19, S&P's down 1. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow Industrials right now up 39. NASDAQ is up 20. S&P's trading flat. If we go over, let's go take a look at the diamonds for a second. So diamonds out here, that's the ETF structure for the Dow Industrials. And let's see what we got. So we broke. Okay, so we got a small ABC down intraday. So A point is 268.97. Okay, so it's about $1. which would get you 267.36. Okay, if that's what we get, so you get an ABC down inside the diamonds, that would be saying that your probability is pretty good in the next half hour that we're going to see this Dow go negative. Right now, you're up by 43 bucks. We were as high as 26,951, and it's given up 140 points thus far. And it looks like, oh, look what we just did, too. We just filled the gap, 26,773. And we hit 26,789. Yeah, this is gonna go negative. You get 30 minutes to go negative. There's no reason they can't go negative, particularly because the diamonds just broke the B point. They broke it with volume intraday. Your probability is pretty good with a half hour left that you'll get that selling coming into the close. If we go over and we take a look at the S&Ps, the E-minis, what do we have here? So I got to bring this closer, bring that into 1 day. Okay, so now the question is, that did 45,000 contracts and 43. Okay, the S&P is not an ABC down, but the S&P, okay, it already hit the 26. We hit 25. Let's see this. Yeah, you get game down here coming into the close of. Yeah, you get game for 25.18 actually. So this is going to be pretty wild watching this thing shake out. If in fact it gets a little traction on the way down. You know, the bulls and bears are going to fight over this in a huge way. There's no doubt about it. Let's go take a look at the XAU, the HUI inside the gold market. XAU, yes, I want to see what this volume was yesterday because that's going to be crucial. How we came into the swing point. Oh, it was good, man. Okay, so yesterday you did volume of 37 million. You're going into 46 million. Well, we're going to need more volume, but wasn't bad. But you're going to need more volume as we go into that swing point because remember, it's the 12.18, 12 to 12.20 in the actual physical gold. We're going to take a look at the Gold Bugs Index. Gold Bugs Index did 28 million. That's good, and you're going into 25. So the Gold Bugs Index was and is pushing into the swing from the 25th, and it actually had volume behind that move. SPG, let's go take a look at the SPG. So the SPG, folks, now this is going to get really wild watching this thing shake out. And this is what it is. So the SPG is the largest malls in the world. And the amazing part about this is that when we take a look at this on a longer-term basis, it's hard to comprehend, you know, 2009, it's at $22. It goes up to a price point of $228. Now, I can understand how this can get and got a lot higher because what happens with commercial buildings, commercial real estate in general, folks, okay, commercial real estate is basically lent out at 5-year clips, you know, with extensions, but the bottom line is that they can change the interest rate, bottom line, every 5 years. So what you had happen here in the SPG and all these big malls is that they had huge amounts of debt. That debt was at much higher rates, and so they got to refinance that debt at much lower rates. So that's where that expansion came. That being said, the amazing part is that it's still up at highs when, in fact, the numbers that come out are like pretty amazing. Let me see if I can get this number. I heard this number this morning. It's quite a number, meaning the amount of. Let's see, erase. I'll try to find this at the next next break. And what I'm looking for is the amount of vacancies that are actually in the large malls, you know, went up pretty dramatically this quarter. You know, so I'm not quite sure what is basically holding that whole sector up. But, you know, something is in there. And I guess, you know, when these large box stores do move and outside of going into bankruptcy, they are on the hook for quite some time on those leases. They can negotiate those leases out, but the bottom line is that the landlord can basically be pretty tough. There's no two ways about that. So what may be happening there is that let's say at least for three more years. It may be just a one-time cash payment to get out of it. Bottom line, they might reduce it so they can make sure they get anything. There's something out there, though, that is basically keeping those REITs up. If we go take a look at GM, bottom line is that this is down off a high of 44 bucks. You're at $34. And let's go over to Tesla because Honda just put a big amount of money into GM today. Let's see what they actually said. I think it's $2.3 billion that they're going to do a joint venture with Honda on a self-driving deal. So let's see what they say. Honda spent roughly 2 years checking out technology belonging to the hottest name in autonomous vehicles, Google's Waymo. But on Wednesday, it surprised the industry and went another route, investing $2.7 million with GM's self-driving unit. Wow, big time. Honda's decision was a big victory for GM and potentially revealing the development for those trying to discern who is in the pole position of self-driving cars. GM's Cruise unit and Waymo have been locked in a close competition. The two have been doing ample road testing and have set similar goals for deploying self-driving cars into robo-taxi fleets. Now both are going to be squaring off for leadership, having made splashes with two big-name partners. GM won the backing of SoftBank's Vision Fund a few months before securing Honda's investment. Waymo has teamed up with Tata Motors, Jaguar, and expanded an alliance with Fiat Chrysler automobiles. You know what the good news is, folks? They're both going to be monsters out here. And what that does for the business in general is pretty good. For Tesla, it's a problem, man. Bottom line is that, you know, Tesla was the first mover out here. But guess what? You don't want to be... Now you're going to get real... Well, he's had real competition for a while, but now you're talking about... Honda's a great company. I mean, you know, if you go back in time, Honda, Toyota, they changed, as far as I'm concerned, they changed the car business. I remember when I was a kid, bottom line, you could blow through transmissions every 3 or 4 years. They changed that whole deal, man. You know, just think if, you know, you go back, yeah, you got to go back 50 years. Yeah, you got to go back 50 years. But the bottom line is that you never had cars last as long as they did. Cars didn't go 100,000 miles, but guess what? Then Toyota came along, and they had to basically spruce it up. And then, of course, Honda came along with the fast cars. And Honda always had those fast motorcycles, those Honda 305s. They were small, but, man, they could go through anything. 877-927-6648. Dow Industrials up 51. Nasdaq up 23. S&P's are flat. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials up 43, Nasdaq up 21, S&P's up 25 cents. Let's go over to small caps and take a look at the small caps. Now, the small caps, folks, have been leading the way lower. What you had out here today, you get a bounce, and the small caps got a pretty good bounce today, actually. It's not so much on the price, but the bottom line is that you do have volume out here at 23 million. So we'll see where this shakes out by the end of the day. They will put some volume in the small caps at the close. We came down with 27 million and 28. 28 yesterday, 27 the day before. You're doing 23 right now, so this is going to be pretty wild watching this thing shake out. Now, 165.90, and that is getting into the bottom of the bar from 2 days ago. That being said, if it can't hold price, what you're going to get here is that you get lower lows even on the weekly, and you get an expansion of volume. Thus far, we've already done 79 million, and that's after making a high. So if you want to see how divergence works and how you can make higher highs with no volume, and you come off with volume, and that's saying you want to go downtown. We made a high on a weekly basis with 68 million. We've already done 79 million on the way down this week. You know, so 2 days left in the marketplace. That's a big number. The small caps are in the lower range. That says 162.26 is game. We've made 164.18. So this market here, when it takes a break tonight, it is going to have a lot to digest, particularly inside of the note and bond market. Now let's go over to the note market, and we'll take a look at this. We're going to look at this on a continuous contract. Now, what happens with a continuous contract, folks, is that they just tie contracts together because these contracts expire every 3 months. What you can get out of this is that where is like the major support and, you know, resistance. So what you have is this. We broke down, you know, if we basically, if you go back to the 10-year, the 10-year was at its low in 2012. That's when we were at 135. The next leg was 134. That was 2 years ago. That's pretty amazing, 2 years ago. Now, where we're at right now is saying a couple of different things. We're at 118, 117's game. Realistically, it looks to me like you get 116 all the way down to 114 is game. That could be good or bad news. And specifically what I mean is this. We traded at that level from January of 2008 over to May of 2010. So the bottom line is that you had a year and a half there. Most times when you're basically coming into something like that, that is monster support. That's the type of floor that you're looking for. So it's just possible that the note and the bond, well, here, okay, so that's the 10-year. Now let's do the same with the 30. We go over to the 30. We'll put this in a continuous contract. And what I'm looking for here is I'm looking really for the same time frame. Yeah, we got it. 2011, it's actually longer in the 30s, so that's good. So what that means is this. It means that, you know, we've had the Federal Reserve going up on short-term rates now for quite some time. The bond market basically has been shaking it off. And all of a sudden, you know, it seemed like it came out of nowhere, but, you know, it's not out of nowhere, because what you have is that the positive fundamentals that are out there, meaning that you've heard people talk about like pretty going wild, meaning the economy is running on, you know, steroids. Things are going good. You had the Federal Reserve Chairman Powell yesterday, bottom line saying that, hey, listen, man, everything is good out there. You know, whether it's unemployment, whether it's cash flow in companies, whether it's lower debt structures, all of the above. So if that's the case, we just may be out here and we'll have to get used to these rates at this level for a longer period of time. Because I've seen this happen plenty of times that, you know, the market doesn't respond, the market doesn't respond, the market doesn't respond, then boom, the market responds, does it, gets it over with a week, 2 weeks, and then all of a sudden you're at a different level. We'll find out if that's the case. Let's go take a look at Lennar. Came out with numbers last night. Now, Lennar is down 67 cents. They come out with good numbers. That's not the end of the world there. If we go take a look at some of the other home builders, because we were talking about this yesterday, and there's no doubt that inside the real estate market, it's going to make a difference because the 30-year rates, that is a big number. What is the mortgage rate that we were paying? That makes a difference in the rate, the mortgage business in general. So TMHC, let's go take a look at this. THMC. This is Taylor Morrison. Oh, wrong one. Let's see, 1 second. LENSRV. Taylor Morrison. TMHC. That's right. TMHC. Okay, so this is down 31 cents. Yeah, this is not bad. You know, this is gonna be intriguing watching this. And you know what the housing equities have done is that they've come back to monster support. They don't look like they're going to break down. If we go back to Lennar for a second, this is important in general. Lennar actually has a high volume high. So to me, Lennar is going back to that high of $72, which I'm digging. It's coming into support. Now, that support has been out there since March of 2013, going all the way over to February of 2014. So, you know, Lennar is certainly saying, when you're taking a look at this, that the housing is not going to break down. The real question is going to be, what is the price point? What is the interest rate? And what is that going to basically do to prices in general? 877-927-6648. We get over and take a look at the King Dog Amazon. Amazon yesterday came across they're going to be paying all their help $15 minimum wage. Now, what happened today is that, yeah, that is what is going to happen. So they gave them that, but then they just took away their bonuses and stock awards, which is pretty wild, man, because I don't know what the stock award was, but I can tell you, if we just look at this for a second, it seems that if you were working for Amazon and you were getting any kind of stock, you know, we go back to 2014, you're at $293, you're at $19.57. So what this story says is that Amazon's going to be eliminating monthly bonuses and stock awards for warehouse workers and other hourly employees after the company pledged the $15 an hour. The warehouse workers for e-commerce giant were eligible in the past for monthly bonuses that could total hundreds of dollars per month, as well as stock awards. After the elimination of bonuses and stock awards, hourly operation and customer service workers will see their total compensation increase. It will increase, and it'll be a fast increase. There's no doubt about that. I'd love to know, though, what the stock award is, because They probably realized people weren't applying for Wales jobs for the stock awards. Yeah, but guess what? That's Starbucks. People have made a fortune to the stock awards. Stay right there, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go to our man John in Philly. Hey, John, what's going on, brother?
Hey, Tommy, good to speak to you as always. I wanted to quickly ask you if you could give me fresh eyes on coffee, looking back maybe the past 2 years, and tell me, just when you do a quick look at it, to tell me if you can see the case that a bear market in coffee is complete and that this 2-week bounce that we've had here is the start of an uptrend.
I like what it's done. I mean, this thing came off the bottom with some big volume. I mean, we're down from 2016 at $1.76 a pound. You go to 93 cents. I just wait for a pullback here. I'd be all over it like at $1. You're at $1.06 right now. You know, it has to get inside, John. It looks to me, I mean, ICE is laying out at $1.12. You get back inside $1.12 and you get big volume. I mean, you get big price. Right now, it's saying that, yeah, $1.24 is game, you know what I mean? Because it broke that trend for sure and broke it with conviction. It hasn't broken a larger trend yet, though. But I think
very good. Hey, listen, thanks for that quickie. I appreciate it.
Cooking, brother. Have a great one, man. Have a safe one. Market-wise out here, let's see what we have, folks, as we're coming into this close out here. You get the Dow Industrials up 74, NASDAQ up 28, S&P's up 2.5. S&P's held. It's impressive, folks. So bonds, 10-year note down 20. Ticks, 30-year bond off 1.25 ticks. King dollar just didn't get the traction that it should when we're taking a look at the type of interest rates that just went topside here. And we talk about interest rates. The 10-year right now is yielding at 3.15, folks. That's the high since 2011. 30-year is 3.30. That's the high from 2016, I believe. It might be 2014. But bottom line, the rates. Well, the 30-year bottom line went up in a big way today, because if we take a look at the 30-year, what you're looking at is this. In the last year, the low for the year in the 30-year is 2.6. The high is 3.3, which is today. Stay right there, folks. Going to be coming back with numbers after the close.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials up 54, NASDAQ up 25, S&P's up 2.5, gold contract down $4.20, trading at $12.02 an ounce. Silver, flat, $14.68 an ounce. Light sweet crude up $1.76.18 a barrel. Notes and bonds. Monster day out here in the note and bond market, folks. We had the 10-year note down 22 ticks, 118.04. 30-year bond off a full 2 ticks, two points rather, which is 64 ticks at 138.16. The yield on the 10-year right now is at 3.16. And to give you an idea, from year to year, we basically have just gone up 100%, or 50% in the 10-year. The low for the year is 2.2. The high right now is 3.14. We go take a look at the 30-year. When you take a look at the 30-year, pretty intense also. We go from the full year, 2.6 is the low, 3.315. That's where we are right now. The note and bond market did go lower, had volume behind the move, had conviction behind the move, big numbers. King dollar. King dollar up 285 ticks, trading at a price point of 95,425. The euro is trading at 115.16 to 1 U.S. dollar. The yen is trading at 114.34 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at it. What do you have? Okay, so all week, actually about a week and a half. Actually, this is pretty amazing. Actually, you go back to the 29th of August. 29th of August, we were trading at $291.74, and we are $291.76. So you can see you're at highs, you get light volume at highs. It's been testing out. You know, we did go topside on September 20th with some juice. The low of that was 291.23. The high is 293. Bottom line, what do we do out here today? You go sideways, you push into it. S&Ps can still test that area because we're still into the low of that area. Dow Industrials, bottom line, made another new all-time high today. Gave it up on price, but bottom line made another all-time high. Went to 26,951. It gave up 125 points coming into the close. NASDAQ Composite, different ball game. NDX bit, different ball game. Small caps, different ball game. NDX, well, first the Composite. Composite went sideways, 25 bucks. You're 8,022. That is having a tough time at the September 5th downdraft. That downdraft started at 8,077, and we went down to the 7,962 area. NDX 100. I'm really surprised that the NDX 100 actually, folks, couldn't get up and over the highs today because you had Apple up big earlier. Apple's still up pretty good at the close. NDX 100, though, also is having a hard time just getting into that high. Right now, we're at 76.37. You know, bottom line, you're into the low of the high, not the high. Gold contract. What do we have with gold? What's surprising in the gold market is this, is that we had notes and bonds today go to the moon, and that means interest rates went higher very quickly, and the gold market didn't get smoked. What we did have yesterday is that we had a nice sign of strength yesterday. You had buying come in the market yesterday. Bottom line, you back down with lighter volume. This gold market still wants to go after 1218 to 1220. That is where the sellers are, and they're laying there. Silver. Silver just may lead the way for us. Silver went higher yesterday, pulls back today. Really a light volume pullback, which is pretty cool. Yesterday, folks, we had taken out the consolidation inside the silver market. We did 106,000 contracts. Today, you back down at 65. That's a good number. That silver does want higher price. Notes and bonds, as I said, this was one heck of a market. And what you had happen is this. The note and bond market, folks, were going down all day long, okay, right from the get-go this morning. For some reason, the broad market, the broad indices, the Dow, the NASDAQ, the S&Ps, didn't pay attention to that until 2:30 in the afternoon. I'll show you. So we have the 10-year up if you're watching Tiger TV, and you can see that all day long was just, you know, meticulous. Minute by minute, it just started ticking down. We started out at 118.24. All day, it just ticks. Well, at 2:30, when it actually hit its low, that's when basically the S&Ps took a little conniption like, hey, what do you mean we're going to have higher interest rates? I don't want higher interest rates. The stock market definitely doesn't want higher interest rates, folks. That's the bottom line. Well, they don't want fast moves in the interest rate market. Let's put that'd be more the key. Well, bottom line is that's when the S&P, right at 2:30, it turns around and basically gave up 10 points. It went from 29.41, and about 30 minutes later, you were down to 29.25. So you gave up, well, it's almost 35, yeah, it's 19 points from the high to the low. But that high was actually established at 10 o'clock this morning. But bottom line, it gave up some big numbers. Small caps. We go take a look at the small cap, the IWM. What you have with the small cap, Small cap did 25 million shares. Now, it's going to be a toss-up, but that's good volume, though. You had a bounce in the small caps. That is good volume. We came down on 28 million yesterday. It came down the prior day of 27. Now, if the small caps do not hold price, meaning that they don't get back up inside 169.35, and we were 165.97, what you're going to have here, you're going to have a high volume, low weekly bar, because what we've already done on the weekly, we made a high in the small caps with 68 million shares. We've already done 81 million shares on the way down in 3 days. That is telling you that you have more sellers than buyers inside the marketplace. King Dollar. What do we have with King Dollar? King Dollar, pretty wild out here. Just King Dollar, bottom line, closed at its high. You know, but the way these interest rates go, I'm surprised King Dollar's not up at about the 96 number. Stay right there, folks. We got our man, Mr. Jim Prince, coming up next. Growling and prowling with us. We're going to be talking currencies. We're going to be talking some commodities. Dow Industrials closed up 54. NASDAQ up 25. S&P's up 3. We're coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we had the Dow Industrials finish up 54, NASDAQ up 25, S&P's up 3. Let's go over to our man, Mr. Jim Prince, as we do each and every Wednesday at 20 past the second hour. You can find Jim every trading day, right, folks, at the greatest business on earth. That website is gbemembers.com. Jim Prince, what's going on?
Hey, Tom, how are you today? Just out here in Southern Oregon,
living on the edge. You know what they say, if you're not living on the edge, you're taking up too much room.
I like that. That's true, man. That keeps you mentally, physically, and spiritually in shape when you do that, man. Yeah.
It does. And, you know, I really love this time of the year. I'm a huge baseball fan, and, you know, playoffs have started. You got your Sox coming in. I assume you're a Sox fan.
Yes.
And,
yes.
Yeah, really looking forward to it. Last night's game with the Cubbies and the Rockies was really great, too. Just a great time of the year.
That's sweet. It is a great time of the year. There's no doubt. So let's go take a look at some charts. Tell me, where do you want to start? I got them all up here.
Yeah, let's pull up the December copper chart.
Okay.
Chart out there. And so copper is put in this bottom formation, has rallied, and now is consolidating into a little triangle pattern. You see I have marked off on the chart.
Yeah.
And I'm showing a lot of energy now has shifted to the upside. And we do have resistance right above. I have that marked with the horizontal goldish line there.
Okay.
And I also have resistance of the 89 simple moving average just above. But if the market elects to break out from here, which I'm anticipating it will, then we're going to see higher prices, because seasonally that's what it tends to do. And I sent you over a seasonal chart of copper as well, 10-year cash seasonal tendency.
Okay.
And that blue line, if we just kind of focus on that, you see how it bottoms out here October, November?
Yeah.
Of every year. This is the 10-year historical tendency, and from there, from that November low, tends to rally going right into February and March. So that's what I'm kind of anticipating here as things are starting to set up for this seasonal move.
Yeah, that's pretty cool, man. And you know what? It's like we know that China is a huge buyer of copper, right? So I mean, it's like, okay, is that this cycle? And then, you know, I have the copper chart up here, and when you look at this, man, it's like, this is interesting, because if you can launch 288, we're at 282, man. You could beat a 335 in a heartbeat, man.
Absolutely, and that big round, that big number of 300 there, 3,000.
Yeah,
that's a monster.
Look at that. That's a nice looking chart, man. And what I mean specifically, folks, is this: it's taken a while for this to lay out. I mean, we've been down, you know, July 11th, kind of it started out, but that's a clean looking chart. Love it. Okay, so next, what would you like to look at?
Yeah, so next, December cotton.
Okay.
Yeah, we've looked at cotton here, you know, over the last couple of shows I've been on.
Yes.
And I initially marked off those big blue rectangles, and the one on the right, the bottom of that was the target. And you can see we're right in that ballpark now. The market has really sold off, and this followed a seasonal tendency as well. So we've really had that move down. The market is at a cycle area at a support area where it also is coinciding with a cycle. I look at my stochastic down there on the bottom of the screen of the chart, and it's potential that we're going to get a bounce here. So I've already taken profits on this move down, and when the market gets to it gets extended like this into those cycle lows, we'll look for short. We're going to look to you know, either tighten stops a lot or even just take profits off the table.
Yeah, you know, it's interesting. So, I mean, you know, cotton, you know, came down from this, you know, 96, but yet that's way off as low as 55 going back to 2016. So, yeah, man, some of these commodities can, like, really move, can't they?
They can, and you know, when they catch a bid, they can really trend to the upside too. I mean, there's no stopping. Just on this chart, if you go back to the first part of the year, you can really see that's a huge move that this market.
It is. What Jim's talking about, folks, it went from 66. That 66 was October of 2017, going up to June of 96. Oh my God, that's 33 cents. And that's what do you got? Tick size is a penny, $5. No, that's a tenth of a penny, isn't it? Oh, no, it's a penny, $5. So it's $500 a point. There you go, $33. 33, 5, 3 is a 15. That's a month, $16,000 move, right? Wow, I think that's what it is, right? No, 1,600.
You're quicker on your feet than I am, Tom.
Yeah. Okay, yeah. Let's look at the next one.
All right, so the next one I sent over, actually two currency charts. I sent over the December U.S. dollar index.
Okay. Well, there it is. I got it right there. Okay.
So the market actually formed what looked like it could be a big topping pattern, came down to, what is that, around 93.30-ish or so in latter part of September, and has since bounced. And gosh, what do we have? 1, 2, 3, about 6 or 7 up candles in a row.
Yes.
And just taking out resistance here yesterday and today. And so now you see I have that ellipse drawn on the chart. I'm anticipating the market's going to go up and fill that and move higher from here right up into my resistance zone, that red zone there.
Yeah.
Based on the energies that I see on my indicators, the way I read those.
And that's the last high. That's what we're looking at, right?
Yeah.
You know, it's surprising that that didn't make it all the way up there today with the way this bond market got smoked. I mean, it's like, whoa, man. You know, that note market and the bond market, that was one of the largest moves in a long period of time. So we'll see how this shakes out tomorrow morning. But it definitely, fundamentally, it has the right to go there now, for sure. And then let's see, December euro?
Yeah.
Okay.
Right there, the December euro. So when I'm looking at the futures currency contracts such as these, rather than trading the dollar index myself, because of the volume, the lack of volume, and you know, players essentially in the market, I'm looking at the euro and basically very similar looking chart you can see. But in this case, I would be looking to go short, you know, fill in that ellipse, get down in this case to that green support zone that I have marked on this chart, just because there's more players in this specific contract if I'm going to trade the futures contract.
Yeah, no, I can see that. Well, we've certainly, you know, I mean, this dollar basically is moving commodities as well as currencies around all over the place. You know, that oil contract, you see that oil contract today? Oh, my God. That thing, you know, we came in with more oil, and, you know, this is a case, folks, that if you're actually a fundamentalist, you would have got your mind blown today, because it came in with 9 million extra barrels as a build. They were looking for 1.8 to 2.2, and then it went down for all of about 10 seconds and then just took off topside again. It's like, you know.
Yeah. Sold off right off as soon as the report was released, and then really bounced from there, and it was a good run. Good run,
big run. Listen, folks, you can come over to gbemembers.com. Check out Jim. He's out there every trading day. He's on here every Wednesday at 20 past the second hour. Great analysis. Does a lot of great teaching over at his site, so check it out. You get so the weather out there now, you about what, 45 to 60 or something? Is that what happens?
Oh, no, right now we're in the 70s.
Oh, sweet.
Starting to get a little rain.
Oh, but, that's beautiful, man. Yeah.
Yeah, it is.
Yeah. So who's your favorite baseball team?
Well, overall, I'm a lifelong Giants fan living out here on the West Coast, but they're not in the playoffs this year. But I like the Brew Crew. I'm looking for them to do some things this year.
Okay, good, good. Okay, brother, you have a great one, safe one. Look forward to speaking next Wednesday, Jim.
Thank you.
Thanks,
have a
man.
good one.
Stay right there, folks. Come right back. Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at the Tilray, the cannabis equity that has a monster market cap. Yeah, this had a market cap today, folks, of $14.6 billion with a B. And bottom line is that they've come out with numbers. So let's go take a look at what they're looking at here. So let's see what they have to say here. Well, they're also going to place a convertible senior note of $400 million. I'm going to go over that for us too, but I want to go through this first. They see third quarter. Okay, so let's bring this back. This is so outrageous, it's unbelievable. But bottom line, it is what it is. So. Okay, they see third quarter revenue coming in at $10 million to $10.5 million. They had seen 9.94. Big deal. They can make another 400,000, right? They have cash as of September 30th, 117 million to 118 million. Their long-term debt is cheap, nothing, $9 million, but they're going to put 400 million in convertible notes out here. Let's see. So now let's find out what the convertible note is. Okay. They're going to offer 400 million convertible notes due in 2023. Okay, so that's 5 years from now. Initial purchase option up to an additional 60 million. Okay. Plans to grant initial purchases an option up to additional 60 million in notes. So what will happen is this, is that they have a 400 million note, folks, and what that means specifically is that if they get enough draw on it, they'll go up to 460 million. The proceeds are going to be working capital, future acquisitions, general corporate purposes, and repay approximately 9.1 million existing mortgage related to facilities at their British Columbia facility. It doesn't have here, let me see if I can get this. It doesn't have here what the convert is, though. That's what you want to know. When you buy a convertible note, folks, what happens is this, is that first you get an interest rate, then you get a price to convert at, and then you get a date to convert at that price. And that is the, you want to know, bottom line, what the convert rate is at, because when a public company, or when anyone does a convertible note, you want the note to convert into equity. That's kind of how you do these things. You know, you're hoping that your equity can stay up, because all of a sudden, then what has happened is this, is that you've turned debt into equity. You know, because if they went out right now and they sold 400 million in equity, that would dilute the shareholders. And in this particular case, this has been, as our man Mr. Dave White would say when he's right, is the sliver stock. When this went public, this was a sliver stock, is that out of the amount of shares that are outstanding, bottom line, they only pushed out a sliver of those that trade in the marketplace. And the smart thing about that is that in this particular case, they got the stock going topside. You get the shots that come into it. Right now, there's a 35% shot position. And as long as they can keep coming out with news articles, and the cannabis stocks in general, bottom line, are the news in the market these days, they can keep that stock to higher price. Now, that being said, this closed at $156. This is trading right now at $149. But that's nothing. That's only $6, $7 down inside this equity, you know. What is intriguing, and we talked about the, this is pretty cool, so listen to this. If you didn't see this yesterday, Pepsi-Cola came out with their numbers. And what happened inside the conference call, and by the way, Pepsi came out with monster numbers. The stock was trading up at $111. And what happened inside the conference call was the CFO got a question about were they going to basically get into the infused cannabis business as Constellation Brands, as Coca-Cola is looking at. I don't believe they got into it yet. And he answered no. And when he answered no, folks, the stock went from a price point of this $109 and closed out at $108. Now, today it's at $107.52. I suspect what you're going to have out here is that they'll probably have to rethink that whole deal. The reason being is that we go over to Constellation Brands, and what's going to be cool here is that I believe it's going to be tomorrow morning. Constellation. I believe it's tomorrow morning they come out with numbers. Let's see. So Constellation STZ. Yeah. Okay. So Constellation Brands is going to come out tomorrow morning before the open. The market, what the market's going to be looking for here is a few things. Number one, they're going to be looking at. Let's bring this back and take a look at it. So Constellation Brands still at highs. It's been consolidating up at these highs since the November of 2017. And oh, look at this, interesting. It's got a high volume low, though, at 198. So that can go to 198. So what does happen is this. When they come out with numbers, they're going to give an update, okay, on the aspect of where they're thinking of this number that they put into Canopy Growth. Because they are, bottom line, the largest owner right now of Canopy Growth. You know, we'll see where the whole thing shakes out, and we'll see how much more aggressive they're going to get. Because what happens is that on a filing, like a quarterly, if they are going to go even deeper into the cannabis market, that would be a material fact, and they would put that inside their prospectus. So we'll see where this whole thing is going to shake out. But there's no doubt that there's been Horizon. Let me pull up Horizon ETF. Let's see what this one. So Horizon Marijuana Life Sciences ETF. Let's see what this one has been doing. So this is trading $23.90. Inside of this, okay, so Aurora Cannabis is first, 12%. Canopy's 10. Tilray's 10. Okay, so you got plenty of cannabis stocks in there. Yeah, this thing, you know, 2 months ago was $14. It's $23.90. It's interesting because you get a high volume high at $26.67 too. It still wants higher price. Yeah, we're going to see a lot more volatility. What is going to be really intriguing is this. So October, I think it's October 17th, maybe it's October 27th, is going to be the day that cannabis gets legally recreational inside Canada, the country. These companies I expect at that particular point, that's when they're really going to be vulnerable. The reason being is that the numbers that they've come up with from one quarter to the next are pretty dramatic. And just to give you, I think Canopy Growth is one of the best ones out there. But even that being said, they expect to go from 25 million to 91 million next quarter. It's quite a feat. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow finished up 54, NASDAQ up 25, S&P's up, S&P's flat, actually. GDX, let's go take a look at the GDX, the gold equities as they come into the close. So GDX out here got to a higher high, 47 million shares. Oh, this is pretty cool. Oh, man. Okay, so this is going to be a trip. So listen, watch this, folks. Whoa, baby. Okay, this is going to be interesting. So what we did yesterday was this. Yesterday, you do 70 million shares. We get to a price point of $19.07. The B point on this is $19.10. Well, we crossed it today, and bottom line, we got volume behind the move. So what you have here is you have an ABC structure on the way up. Now, you gave it up on price. You know, we didn't get below the B point, but when we take a look at this, what you're going to see is that you get an ABC up, a confirmed one. Man, this is going to be a trip watching this shake out to see how this plays out. The reason I'm saying that is because you know, you didn't hold price. But let's do it. Let's do it right here. So the A point is $17.28. That's the low that was established in September. Your B is 1910. What did I say? 1728. So you got 73 plus $1.40. That's 240. So 1720, 1820. So you get a 1920. Oh, good. So it's $1.80. So that gets you, basically it's $20. A to B equals C to D. And that's basically not a bad deal, because this is what you have, is that we got the volume going. We'll find out if we can get there. You know, you get there, we crossed the B, you did it with volume, and when you do that and give it up on price, meaning you pull right back, you can turn into a complex one. What a complex one would mean is this, is that as long as you pull back on light volume and you basically didn't expand with volume, you still get an ABC structure on the way up. Now the C point on this is down at the $18.14. You don't necessarily have to go down there, but that's how that's set up. Let's go over to the SLV. I'm curious if the SLV is a little bit different. Yeah. So the SLV, now this trades along with the price of silver. What we did is this. You went higher yesterday, big time, 20 million shares. You're back down with 8. That's still saying that the silver contract, the physical silver contract, wants to run up into the $15 mark, which would be a nice run. There's no doubt about that. You go take a look at the Barrick. Barrick is bottom line buying Rheingold Resources. Barrick did go higher today and held price basically, 1162. So that put juice inside the GDX because of the fact that, and Rheingold did the same thing. Rheingold's off that bottom 59. You're up there at 72 right now. Let's go look at Agnico Eagle. That's right, Agnico Eagle had also busted the B point yesterday. So Agnico Eagle is also an ABC up. Now that went higher today, then basically come back. Agnico Eagle, the A point is $32.18. B's $35.51. So you get $2.30. Gets you $3.20. So $36.40. This is good. You know, in both cases, what that does, that gets that up into the price point of $37.60. And that's where we have to actually get over, folks, okay? Because that number there, what that number is the downdraft from August 15th. This little baby here, let's look at this. Man, Mr. Dave White saying, what is the stock? I remember we've had a couple of calls on this, too. Let's see what this is. So LODE, this is Comstock Mining. It's a North American precious metal company focused in Nevada and the Comstock Lode District, explores for gold. They take in a fortune. I'm only kidding, folks. They take in $22,000 a quarter. So for the year, they basically took in $104,000. That being said, intraday out here today, the stock went up to 31 cents, closed at 22 cents. Let's see what they're saying. Man, I'll tell you. See, this is the when I see stuff like this is when it's telling to me that, you know, you get the speculation that's happening, and the cannabis stocks, it starts going to other sectors. I mean, it's going to be amazing if this just popped basically 13, well, it would pop like 50%. It went from 19 cents to 31 on the aspect that they received the National Sustainable Mineral Development Award. Comstock Mining announced today they received the United States Bureau of Land Management Reclamation and Sustainable Mineral Development Award in recognition of the complex reclamation, deep shaft sealing, and restoration of the historic silver mine shaft that was completed in conjunction with the realignment and rebuilding of a major portion of Nevada's State Route 342. This project includes capping of the hazardous historic mine shaft, the realignment of major state road away from the mine shaft, safe removal of hazardous materials from the legacy mining, and reclamation and beautification of the historic mine features and historic mine landscapes in the historic Comstock Lode Mining District. Bottom line, if that's what moved that stock had basically 50% and then gave it up on price, folks, that is a problem. That's how that baby does shake out. Apple, let's go take a look at Apple. So before we know it, folks, you're going to hear holiday season in a huge way. And Apple today, bottom line, new all-time high, gets to a price point of $230, takes out the high of $229.67, which was established on the 9th. And Apple is coming into, of course, their best number, their best quarter. And the quarter is pretty substantial the way that Apple works, folks. When Apple reports, Apple's going to report on November 1st. Now, November 1st, that is going to be the Apple's on a different year basis. They start their fiscal year off on this quarter right here. So the report on November 1st is for the last quarter. And here's the expansion. This is how much Apple thinks they're going to do in the holiday quarter. They plan on reporting $61 billion in revenue November 1st, which would be the quarter ending September 30th. And then they figure October, November, December, $92.3 billion. That's what they're looking for. They're looking for an expansion of revenue from one quarter to the following quarter by over 50%. And they're looking for lots of sales. Right now, iPhones are still growing. It's pretty amazing, man. iPhone's still growing by almost 3% per year. No, 4% per year. Their services are growing by 6% a year. Macintosh, that's not growing at all. iPad is contracting by 5% a year. The other products, meaning that more than the iPods and all of that, more than likely that's growing by 5% a year. So big numbers. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, we go over to Barnes & Noble. Barnes & Noble closed at $5.46. That right now is trading at $6.70. And what's going on is that you have Barnes & Noble has created a special board committee to consider selling the retail after receiving interest from several parties, including chairman. The retailer says received interest from the Rigoro, which is the chairman of the board, the company's founder, largest shareholder, and acting chief executives, and other unnamed parties. You know what I think's going on here, folks, so it gets really intriguing, is that the retailers that are actually stayed alive, I think they're going to do fine. They're going to come out the other end, because we were actually looking at the SPG, and we were looking at the Simons, which owns the biggest malls. That chart also basically has not broken down, even though vacancies inside malls have gone up. And I think what you're going to start seeing out here is that, picture this, you get these big box stores, the ones that are still alive. They're going to start making other partnerships with all of these larger internet companies that need delivery, pickup, and all of the above, because space is at a premium. Warehouse space, you know, folks, has gone through the roof, okay? So when you look at an aspect that Barnes & Noble, I can see them in 2 seconds changing the MO, getting less books in there, getting more merchandise in there, meaning electronics in there, and basically turning around and being basically a pickup place and drop-off place for more than one company. You know, I think that's where we're going, and I think what's going to end up happening here is actually space is going to be what is worth big dollars, because the differential being that it's not going to be one company in space, though. It's going to be, you got the space, you do business with all these big companies, you're going in and out, and that's where the traffic is, because that's a lot cheaper than an Amazon going across the United States. Walmart already has the setup, but that's how I think this thing is going, and it's going to be intriguing to watch how this plays out inside the Barnes & Nobles of the world. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here tomorrow morning, 8:30. Jerry and Jason. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.